So stop. Knock it off. If you're an agent that says overfunded, stop. Hello and welcome to Casey's Clarity Corner, where I teach you simple things about life insurance that you should have already known. On today's episode, we are going to be defining the word overfunded in regards to a traditional whole life policy and an index universal life insurance policy. Why? Because agents and clients don't understand this word. They've got it all twisted around.
Is overfund, not fund.
And overfunding the policy?
What we like to do over here with the overfunded policies is
An overfunded cash value whole life insurance plan.
So we're gonna straighten it out today. So if you're an agent, you better get ready to take some notes. You're about to get educated. And if you're not an agent, you're just looking around doing some research, well, you're welcome. Take this information and don't get scammed. Let's start with whole life. How does a whole life policy work, first of all? Well, typically, you are paying for what's called base coverage, right? And you are paying a guaranteed amount to get a guaranteed amount passed to your beneficiary, right? In this situation, there is no extra room for any funding, let alone overfunding, because the base death benefit and base premium, these are guaranteed amounts. If this guaranteed number is $300 a month guarantees $200 of death benefit, $200,000 of death benefit to be passed to your beneficiary. That is it. That is the deal. There is no ability to overfund in this situation. However, when you take this base policy and then you add a paid up additions rider and a supplemental term rider, well, now you can overfund the policy with extra money. Because these things cost extra money, but they're not purchasing base death benefit. They're purchasing term insurance death benefit, which is cheaper, right? This paid up additions rider allows you to put extra money on top of the base, right? To increase your death benefit, cash value, everything, to get more benefits out of the policy. So the overfunded word comes from utilizing these riders inside the policy, contributing more than the base amount to get more out of the policy. So are you overfunding a whole life policy when you purchase a paid up additions rider and a supplemental term rider? Are you overfunding the policy? No, not technically, right? Because you purchased these extra perks, this extra funding room inside the policy because you wanted to fund it more. And you are funding over the base. You are overfunding the base amount, right? Overfunding the base amount makes a lot more sense than just overfunding a whole life policy. You can't overfund the base amount without these guys. If you overfunded the base, remember our example, $300 a month gets you $200,000 of death benefit. If you put more than $200 into this policy without having a PUA or a term rider, your policy is now going to be taxable. It is now going to become a modified endowment contract, and you will lose all of your tax advantages. If you do purchase a PUA rider and the term insurance with your whole life policy, you are purchasing a certain amount of extra death benefit, which means you have a certain amount of extra funding room, right? If you exceed those limits, your policy will still become a mech. So you don't want to do that. You want to fully fund your PUA and max out the policy. You don't ever want to overfund it. You see how I don't like this word very much? And it's confusing? Maybe, sort of, kind of. I'll give you another example. If life insurance is as valuable as people say that it is, then life insurance agents should be able to explain it. And everyday people should be able to understand it. Which is a huge reason why I started LifeWise. LifeWise is an agent training platform. It's a community platform. It is a place where I am giving all of the information that I have about life insurance so that other agents can do the same. I'm only one person and I can't make a difference on my own. So if you are a life insurance agent and you're looking for training, you're looking for people who want to understand the truth and just want to help people, LifeWise is for you. Check out lifewise.io and you can start a 5-day free trial right now. By the way, in January 2026, we're launching LifeWise 2.0. So right now you can also lock in founder member pricing, and 2.0 is going to be huge. So you should lock it in before it's too late. Anyway, back to the show. An overfunded IUL. Is it possible? Should people be using the word overfunded to explain an IUL? No, they should not. Why? Why would anyone even say this about an IUL? If you watch my videos, you know that an IUL can be max funded, right? Max funded, not overfunded. But there are agents out here saying things like,
when it comes down to these IULs, these cash value life insurance policies, be able to take the loans against the policies, you have to overfund them.
So why are they saying that, right? Well, a common practice, unfortunately, when it comes to IULs, right, is to contribute into the policy what's called the target premium, right? The target premium is the goal amount. It's the goal amount for the year. When you contribute the target premium into your IUL, your policy is in good standing. You're not going to be asked for more money. You've satisfied the policy. However, you have not max funded the policy, right? This target premium is not the most that you can contribute into an IUL. The guideline level annual premium is the most that you can contribute each year. The target premium, which you should know, is just the minimum goal amount. So when people say overfunded IULs, they are talking about contributing more than the target premium. What they should be saying is a overfunded target indexed universal life insurance policy, or you should overfund the target premium in your IUL. Because is it possible to overfund the policy more than the guideline level annual premium? No, it's not. It is not possible to exceed this max contribution, because then your policy once again will become a mech and you will lose all of your tax advantages. So why are people saying overfunded? And there you have it, folks. Can you overfund a life insurance policy? Not technically. Can you overfund the base premium of a whole life policy? Yeah, if you purchase a paid up additions rider and you have a strategy in place. Can you overfund an IUL? Absolutely not. You can overfund the target premium, but in both situations, you're max funding the policy. It is not acceptable to say that you are overfunding any life insurance policy when there are literal funding guidelines in place to prevent that from happening. Sorry, excuse me. So these guys, suit and tie, talking about whole life insurance, you gotta overfund it. They're just throwing around words. They don't actually know what they're saying. And if they do, maybe they should try to use words that are more accurate next time. Because you're making my job hard. When people come to me and say, oh, I want that overfunded policy, the one you can overfund, I have to sit there and be like, that's not possible. It's not a thing. And then they look at me like, what do you mean? So stop. If you're an agent that says overfunded, stop it. Learn the terminology. Well, this has been Casey's Clarity Corner, where I teach you simple things about life insurance that you already should have known. I'll see you guys next time. Make sure that you comment, ask me questions about this episode. Let me know what you want to hear me explain next. Make sure you subscribe. Don't miss out on any videos that are coming soon. I'll see you next time. Bye!